bad money that's get crowded out, David, to be clear. Bonds, that's why they're crashing. Silver, that's why it's down 9% in 3 years. All these things that are underperforming Bitcoin, they're the bad money.
In today's video, Michael Saylor, Executive Chairman of MicroStrategy, discusses Bitcoin ordinals, transaction costs, MicroStrategy's long-term vision, and the future of money.
I have a question about the timing of the acquisition. Do you have a fixed acquisition schedule of Bitcoins, or do you just sort of buy it when you think the price is reaching a pivotal moment?
You could think of us as dollar cost averaging.
Okay.
We are content, we're continually buying Bitcoin. We do it in the most accretive way possible. So sometimes it's always accretive to buy it with cash. Sometimes it's accretive to do it with equity. Sometimes it's accretive to do it with convertible equity, sometimes with debt. It really depends from time to time. Our view is, Bitcoin is going to go up forever. There will be volatility. If you want a long-term metric, David, I think if you look at the 4-year simple moving average of Bitcoin, then when Bitcoin is trading at multiples of that, then it's getting a bit rich. But when Bitcoin is trading around that or at a discount to that, is obviously, cheap. And so, that's sort of a secondary thing to look at. But my advice to anybody would be, if you have expenses to pay in the next 12 weeks, you have the local currency to pay them in, the peso. If you have expenses for the next, 12 months to 24 months, you hold the world reserve currency, which is the dollar, if you can put it in a bank you trust. Don't put it in a bank that's going to steal your money, but if you can actually put it in a bank you trust, then yes, hold the dollar. And if you have money that you want to hold for anywhere from 3 years to 30 years, like long-term investment capital, then Bitcoin is the right thing to do, because there will be volatility, but statistically, if you look at the Sharpe ratio and if you look at the return, it's the winner, and it's not even close, right? It's destroying every other competitor and every other competing asset class. I think as a general high-level rule, it's not unreasonable. But as with all rules, you have to consider the particulars here. For example, if MicroStrategy was buying $1 billion of the S&P index, that we would be buying a security. If we were buying Apple stock or Amazon stock or Microsoft stock, if we were buying a portfolio of securities, then first of all, SEC requirements keep that from being more than 40% of our balance sheet. If we had more than 40% of our balance sheet invested in securities, then we would be an SEC 40 reporting company. We look more like a mutual fund or like an ETF or something, and now there's a totally different jurisdiction. So obviously the exception to that rule is there's an entire class of SEC 40 companies, ARK, all the ETFs, that's what they do. That's how they add value. So we don't want to be one of those, but Bitcoin is a commodity. It is not a security. And so that's why, for example, probably doesn't make sense for us to buy $1 billion of Grayscale, right? Because you're correct. If our public company investors can hold securities, they have a charter to hold securities, and they ideally want securities that trade on the NASDAQ, operating company securities. But let's make the point here. Most people misunderstand Bitcoin. Bitcoin is a commodity. So if you had a publicly traded company that owned a portfolio of $4 billion worth of buildings, or $4 billion worth of timberland, or $4 billion worth of natural gas rights, or $4 billion worth of oil fields, right? $4 billion worth of warehouses, that actually is a very legitimate mission and a very legitimate charter or strategy for a publicly traded company, because the average investor doesn't want to acquire warehouses or millions of acres of mineral rights, right? They can't do that. They want to buy the security. So we are a security, but we're backed by a commodity. So that's the first observation that is the reason why this is not the case. The second is there are hundreds of billions of dollars of capital that would like to invest in Bitcoin or invest in any commodity, and they don't have the right by charter to invest in the underlying commodity. So that they can't buy the Bitcoin either by charter, it's against their charter, it's against their investor mandate. The second reason is there are only a handful of exchanges where you might buy Bitcoin on that would be acceptable. It would take 6 months to a year to KYC, AML, and certify and vet those exchanges. So most of those hedge funds don't have the physical, technical ability to buy the Bitcoin, even if they wanted to hold it as the asset commodity. The third is, if you notice, there's nowhere in the world where you can borrow against Bitcoin anymore. Silvergate was the last credible institution. So if you have $10 million of Bitcoin, it's very difficult to get a margin loan against it to pledge it as collateral. But in fact, the infrastructure for pledging NASDAQ publicly traded stocks as collateral with your prime broker is quite elaborate. That infrastructure for trading, accounting, collateral, borrowing is 30 years old. So that means if you're a hedge fund with $1 billion and you wanted to get 1% exposure to Bitcoin, you could buy MicroStrategy stock in 30 seconds, buy $10 million of it, and it's part of your collateral package, and you can borrow money at SOFR plus 50 basis points. And it doesn't bust your investor mandate, and you don't need another relationship, and Morgan Stanley will execute the trade. Now, if you decide, if you read that literal, academic observation, you say, well, investors don't want to invest through a public company. It's like, okay, well, you can go back and change your investor mandate, rewrite all of your rules, spend millions of dollars lawyering, get consensus over the course of 24 months, spend another 12 months trying to figure out what exchange to buy it on, then spend another 12 months vetting the custodian. And after about 5 years and spending millions of dollars, then you'll find you're capped out at 10% of your capital being a commodity for tax reasons. So you can see there are a lot of technical, accounting, and very practical reasons why you might not want to hold the underlying commodity. And then, of course, the last observation is MicroStrategy solved the problem for you. Do you know how to borrow $1 billion at 0% interest? If you can do that, have at it, right? And you go and borrow $1 billion at 0% interest and buy Bitcoin. We did, right? Do you know how to custody it? So we've solved the custody problem, the accounting problem. We've solved the issue of, do you know how to borrow money against your Bitcoin? No, you can't. We solved it for you, right? So MicroStrategy is providing an institutional gateway to a public company investor that makes it much, much easier to get Bitcoin exposure and own it. In the same way that, hey, if I was running a REIT and I owned a bunch of apartment buildings in Miami Beach, and you said to me, hey, why don't you just let the public company investors invest in their own apartment buildings in Miami Beach? I mean, the answer is they don't want to go and run apartment buildings in Miami Beach. It's a pain in the ass, and they don't know which ones to own, and they're worried about, the inspections, the insurance, the tax, et cetera.
I get it. The key here, I think what you brought up in the beginning of your statement is that it is a commodity and not a security. Gary Gensler has said that everything besides Bitcoin in the crypto sphere is a security and not a commodity, with Bitcoin being the exception. My question is, do you think that will change the regulatory landscape such that Bitcoin will one day have to be classified as a security and then you'll have to reposition?
No, I think that when we made this decision originally back in the summer of 2020, we scanned all 10,000 cryptos at the time. And one of the questions was, which one is the asset without the issuer? Which one is the commodity? Which one is the most decentralized? And our conclusion at that point was Bitcoin is a commodity. So legally, the legal sophisticated opinion 3 years ago was Bitcoin is the obvious commodity. Everything else is a question mark. What's happened since then in the next 34 months or such since we started this journey is consensus has formed that indeed is the case. So since we made that determination with our attorneys, we've had Janet Yellen endorse Bitcoin as an innovation. We've had Christina Lagarde say it's an asset. We've had Jerome Powell say it's an asset. We've had Gary Gensler, the head of the SEC, in multiple congressional testimonies and documents and interviews assert it is a commodity. We've had the head of the CFTC assert it's a commodity. So and we've also had members on both sides of the aisle in Congress and in the Senate make the same observation. So if anything, Bitcoin's status as a commodity is much more certain today than it was 36 months ago. No, I don't expect that to change. The real key here, David, to being a commodity is for no one to control it and no one have the power to change it. So as long as Bitcoin is so decentralized that no one can change it, and as long as the people that hold it are adamantly against anybody else controlling it, then I think you cement its commodity status. And if there's any one crypto asset that has that conservative community view that it should not be changed, it's Bitcoin. So it is the most secure asset in the crypto universe with regard to its legal status.
If people agree with you, Michael, that Bitcoin is a superior form of money, wouldn't people just store the Bitcoin and not use it for transactions and then transact with inferior forms of money like fiat? And so the bad money, fiat, will drive out Bitcoin from circulation, and so it will never be mass adopted as a medium of exchange.
Well, Bitcoin's market cap is about 500 billion right now. And the value of these financial instruments that I've talked about, all the other currencies, the securities, the properties, et cetera, it's 500 trillion or more. So Bitcoin is not 1%, it's 0.1%. So Bitcoin can increase by a factor of 10, and it's going to be a 1%er. And it can increase by a factor of 100, and by that time there'll be a lot more of the other stuff. And so when Bitcoin goes up by a factor of 100, it'll probably be a 3-4% of the entire financial universe. The bad money that's get crowded out, David, to be clear, bonds, that's why they're crashing. Silver, that's why it's down 9% in 3 years. Gold. The reason that gold isn't returning any yield, why it's up 1% in 36 months of rampant hyperinflation around the world, is gold is now the glass money or the shell beads money or the stone coin money. It's just the gold bugs haven't quite got it through their head that it's antiquated, shiny rocks. All these things that are underperforming Bitcoin, they're the bad money. In addition, look at the peso. The peso used to trade 1 peso to the dollar. And today the peso is like 480 pesos to the dollar. So in 20 years, the peso has lost 99.8% of its value in Argentina. But in the past 12 months, it's collapsed by a factor of 2. And just last week, the Argentine central bank closed the doors and they said, you can no longer convert your pesos into Bitcoin on an exchange, because they realized, according to Gresham's law, that people are going to be trading their pesos to Bitcoin as fast as they can. You see this going on with the Naira. You see that going on all through Africa. You'll see it going on everywhere in the world. What's going to happen is a stampede from weak monies, but there's so many of them, right? I mean, bad stocks, bad commodities, overvalued fiat currencies. People are going to stampede from those to strong monies. But of course, if you're one of 7 billion people and you don't have a brokerage account with a big bulge bracket Wall Street firm, you can't just buy the S&P 500 index and try to custody $10 million of the S&P index on an Android phone in Africa on Saturday, right? You can't custody it. And that means you can't trust your counterparties. So what we're going to see is a steady, nonstop stream of monetary energy trickling from the weak monies and the weak assets to the strong assets. And Bitcoin just happens to be the strongest asset class in the world. Poorly understood, still not well understood, but it's a lot better understood when your bank freezes and they seize all your money and you're about to become bankrupt or impoverished. Then it's easy to understand. It's harder to understand If you're a blue blood limousine, trust fund baby living in upper East Side, and you've got a portfolio of NASDAQ or S&P stocks, and then you think it's just an oddity,